And action, Jonathan.
Let's go.
Let's go. How are you doing? I know how you're doing, but for the audience.
for the guys.
Yeah.
Yeah, I'm not feeling 100% today.
Yeah. So
I felt like I woke
we'll
up
make
with,
you feel
like,
100%.
Yeah, thank you.
In
I
the
feel like
chat.
I've got a bit of a cold.
Hello, everyone. Hello, Luna, Glenn, Andrea from Discord. Really appreciate you guys. And Ganesh is actually showing up every day. I like it. So let's see what we have on gold, and then we'll talk about euro. Okay, so it's not my screen, but so Jonathan will start because it's CPI. I forgot. It's important. CPI. Let's go. CPI.
Yeah, very important data coming up in half an hour. CPI, obviously, for everybody that's interested in the fundamental side of things. So, seeing how this one plays out today. Gold's obviously been a bit more on the bullish side over the past few days. So, be interested to see if that momentum continues today. I mean, for us guys, we obviously put a few levels on the chart of where we expect price to be at the end of the week. But this is one of those events where, again, you kind of look at it and you think, price is very bullish here. Is it going to remain that way? Or, you know, is this news going to shock in a different way? And we're going to see a pullback and make us look like idiots. So we'll see how that fares out at the end of the day. Or in half an hour's time, we'll have a little look to see what that data drop is. Expectations are largely it's kind of a bit mixed. If you look at the month-on-month data for both the inflation rate and core inflation rate, they are forecast to come in a little bit higher. So you can see the 0.2% versus the previous 0%, and the 0.1% versus the minus 0.4%, which, to be honest, that number there was very, very predictable, although it was a shock to the market. Oil prices had dropped so much from the last inflation report, and that's a lot to do with inflation includes that kind of oil pricing, energy pricing, and food pricing. So when oil prices dropped, it was an expectation we were going to see some downside in the inflation rate. So it was a bit more of a shock that we saw downside in core, because that means that generic demand in the US has weakened slightly. So this time we're expecting a bit of an incline there. Inflation rate compared to the year prior is expected to come in a little bit lower, 3.4% versus 3.5%. Core inflation down 2.5 versus 2.6. But yeah, the big numbers for me is going to be this one. This core inflation rate just gives us a little bit more of an idea of demand that's happening in the US. Like I said, it's forecast to come in higher. So if we see it less than forecast or the same as previous, maybe even lower, that's going to be very bearish US dollars. So we'll probably see some further downside to anything to do with the dollar. So upside in our gold, euro dollar that we talked about as well. But yeah, so we'll see how this one plays out. At the moment, obviously the market is a bit more on the bullish side going into over the Asia session through to London session. So we'll see how this kind of plays out. At the moment, we've kind of come back up into this yesterday's kind of high volume zone. Or for you, you're probably looking at the edge of that ledge there, right?
Yeah.
Where the
I think
market's
the
kind
same
of,
area you were like pointing out yesterday that we might get rejection from there, and we are there today.
Yeah. So he eventually got up there. I mean, your trade played out pretty nicely yesterday in the end. It took a while, but it got there. It got there eventually. and you stuck to your plan very well.
Yeah. I think it was my luckiest trade of the year then. I'd say. Yeah, because I can't say if I zoom in on my chart. I don't know if I should call it 1 point or 0.1 kind of. I have shared the screenshot and it looks so funny. But if we let me share this tab which you guys can see, I took the screenshot. The reason of me like canceling my trade, because the value area low, obviously you guys know that the point of control shifted from bottom to high, and the best part is I think you can see this positive delta at this level, right? This is what I was talking about. If there is a lot of buyers trying to push price higher, why they are not able to take it higher, and why we are in range, so the best thing to do is make sure to put your stop loss in. I mean, not like me, I was lucky yesterday, but keep it safe in low volume area, or maybe you can use market structure, maybe a zone where there is a range. So I got saved, you can say, by this lower low here, and then price went lower. And going back to trading view, and if you talk about today's view, let's say I marked out this 2 range. I know I don't really like to use my brain a lot before CPI, but these are the 2 levels where we can get support. I know range act as magnet, but they do act as support and resistance as well. So they the price might take tap again here and then go higher, maybe continue higher. And this area 4553 is a point of control of this range, which is calculated on a task X. That's why I marked it here. And I think somewhere around here all the hosts are betting that if we reach here we got points. So let's see what happens, and we are really excited. And we have so many questions that how they managed to get a headband. So it's very easy. You just, like, I think Glenn said it, he cut up his Tradeify t-shirt, but that's too big, that's too big for me. I do have it, but I'm not wearing it. So it is just normal cotton, and I told my friend to just give me Tradeify, and I ironed it at my house, and it worked. But then I realized that I should have printed the mirror like effect here, because you guys can read it. To read this one, Roman have to flip my camera and you can read Tradeify, and if you're in person you can read it. So that's the issue. Yeah, thank you, Roman. And I can read it. So,
maybe we should shift to the other side of the screen. Maybe we should have the chart on the left hand side, us on the right hand side, just so that we can see your Tradeify bandana.
Yeah. So the thing is, it looks weird if they think it is flipped.
Do you wear that outside the house as well then?
Oh, what do you think?
Yeah.
I wear the hoodie in the gym. The Tradeify one. I do wear it. Yeah.
It looks like a cozy hoodie, to be fair.
Yeah, it is. So right now, I know the idea and everything is going to change after CPI. So what I'm gonna do is just wait what happens, and then let's plan a trade after CPI movement. Like when we do zoop and maybe directly go towards this area, or let's see what CPI is coming, inflation rate and stuff like that, which Jonathan's gonna break down, obviously, the fundamental guy.
Sorry, you throwing that back to me then. Sorry.
No, I got it. That you were so invested somewhere.
No, I was trying to bring up the chat so that I could see the chat. I keep forgetting to do it before the stream, so I'm like in the stream, and then when you mention the chat, I think I need to get the chat up just to see if there's any I think that I need to look at. But yeah, I mean, looking at the gold price, we could try and mark out some levels. We don't really know the rate of change that we might get. I mean, we can look back at what happened previously. So the last time we had the CPI was back here on the 14th of July, and we had like a decent range there, so around about 760 odd pips to the upside. So decent move from that. But very similar to what we had here in terms of like nice consolidation before the event, nice big breakout, and then price came back down, retested. Wouldn't mind something like that. Looking at current price action, obviously that we don't really have necessarily a strong area of, I'd say, consolidation. We have obviously a bit more of a upward sort of channel being created here at that resistance level. So I've got yesterday's market profile on, and I've got the day before that. So if we look at the kind of Monday's profile, we do have a untested point of control just down through this kind of 43.35 area. I don't mind that if price was to come back down to there, maybe to look for a long from here. But at the same time, we might not get that. And if that is the case, that it comes down here, the decision or the inflation data that comes out will be more positive to the US dollar. So do we want to be long anyway at that point? That's the kind of narrative we've got to think about. If this inflation comes in hot, does that change the narrative for us going forward? Or, you know?
Yeah. And I said something and I didn't heard anything. Or
okay. She's back out.
You heard anything, Jonathan, or not?
I didn't hear anything.
Okay. It was muted. Okay.
Yeah.
I was scared. I was like, okay, again. So the idea is pretty much clear, you know. So let's say if we spike higher, whatever the data comes, always I have seen price comes back to the range, and you know that we are already in a range. So even if we spike high, chances are high that we might get opportunity to sell it back in the range. And if we go, as you said, dump lower to the area you are looking at, we going higher is much easier. So either way, we just have to wait for, let's say today's CPI candle is going to be manipulation, like either side. If it goes higher, we might have to sell it because a lot of people are trying to buy. We'll see a lot of buying getting trapped and then going back to fair value. For that, I have to go back to a task, not trading you.
Yeah, I did see as well that retail have really flipped long gold as well now. They have really kind of jumped in here. I mean, if we look at the data from quite a large FX broker, it says 80% of retail traders are long. Now they're usually obviously on the wrong side of the market, so it kind of gives us a little bit of an insight into how retail is thinking about this move. So again, I've kind of said this a lot on the channel, but sometimes when something is so skewed to one side, I don't like to look for that trade. I like to look for the reverse. So like I said, we could have a bit of a mixed bag here. I think obviously if we do see that 0% same as previous, that's going to be a big shock, and that's going to be very bullish gold. It's going to be very bearish for bond yields, which are already kind of on the way down, which is why we're seeing that upside in gold and upside in US dollar and stuff. Downside in US dollar. So yeah, I think I also want to watch how the bond market reacts, right? If the bond market is super...
And the bonds are not even like, the trend line is getting supported. We are not broken below and tested the area yet to confirm the trend on bonds. So yeah, it's just patience game.
Yeah.
DJ, don't say that, robot. We are done with that joke already. All right. So what do you think about euro? Are you trading euro USD?
I did yesterday. Like I said to you earlier, I think I was in it similar time to how yours played out in the end, which was just crazy to me. But
or maybe we tried to trade before CPI, that's why we got chopped.
Probably. I mean, when I saw the market was ranging between the value area, I was like, okay, let me just try and trade the rotation of that. Let me just stay within the value area high, value area low. Obviously, we also had yesterday's value area low coming in at this point too. So that was another strong area of resistance for me. But yeah, so the market kind of rejected the value area high, came back in. I ended up taking a short position at the value area high. And it came very close to my target at the value area low, but reversed back from that.
Yeah.
From that area by literally like a pip. And I mean, I was in it for 8 pips and it took forever, which just tells you how like little volatility was in the market yesterday in terms of or even volume to kind of really kind of drive things. Everyone's kind of waiting for this CPI data today.
Yeah.
So yeah, I mean, I entered around here, target was down for like 8 pips and it took like 4 hours to come through in the end, which I was just like, imagine that 4 hours for just 8 pips of profit. It was crazy. So at least it came out with a profit. You know, would have been I could have flipped my position then really and tried to buy back to the value area high.
That's what we do in the range.
Yeah, just trying to stay in that. And then look at today. Today is very much the same.
Yeah.
Just chopping around. I mean, this is a nice sort of big range that's developing here. So this could be a good, you know, like how we were discussing with the previous gold trade where you have that build up of consolidation, breakout. Maybe that can be where we try and get a retest if we were to see that lower US inflation print. Could work the opposite way as well. If we see a very strong print, we could move back towards this untested kind of point of control from Friday as well. So a couple of options that we can potentially look for. But like I said, we need the data to deviate quite far away from the forecasts.
Mm-hmm. Yeah. Hello, Anna.
Oh, we can't hear you.
Okay. Okay. We can't hear you. I thought I can't.
Yeah, your mic is not did you choose the right like inputs? Just give me a second. I'll see my red.
No, I think it's finally.
Okay,
there you go.
Is it?
All good.
Yeah.
Finally working, yes.
Yes, there you go.
You didn't load the whole thing, but here we are.
Yeah.
Welcome.
So, hello, Anna. What you looking at on gold?
I'm in a trade
Oh,
since the morning. I closed it on the
longs.
Yeah, longs. I'm in it like I'm in it since the morning actually in this one, and I closed it on other accounts on funding because I was like, okay, I'm not gonna risk the profit that I made there, you know, because I'm trying to get the like profit target. So I didn't want to risk this, but on this personal account, it's still running. With stop loss to break even, I might put it closer. I did move my stop loss to break even after this week, which I was lucky actually. And the only reason I did this is because I was in the gym, because the rest of the positions I closed before.
Oh, look at the entry. You got it.
No, the entry was here.
Oh, okay.
This was the entry, which was also not bad. I was looking for the continuation from this spike of the volume here from the 5-minute or from this range. So it had 2 zones, basically key zones, and then it ranged for a little bit and then it continued higher. And then it didn't weak me out only because I actually didn't move my stop loss to break even at that point yet.
That's
so now
take entry before the news and then wait for it.
Yeah, exactly. So it's like just a couple of ticks away from my target all the time. It was like right here. What is it, like 3 ticks before my target? So let's see if it's gonna hit it finally. Are you guys trading anything? Well, were you trading anything today? Let's say like this, because I think, are you trading anything right now before CPI is the wrong question to ask.
So we both traded a lot yesterday with a really long trades. That's why we're gonna wait for CPI and then plan something.
Nice.
I think the
Yeah,
longest
took
trade
a-
of the year was yesterday. Yeah.
Yeah. Ayush was going to try for ages. It just wasn't moving. Just wasn't going anywhere. And then it eventually did when you turn the stream off.
Yeah.
It's always like this, isn't it?
Yeah.
Yeah.
So I guess looking for longs or for shorts during the CPI. Where do you think we're gonna go?
I mean, for our gold bet where we were talking about the levels that we're looking for, we need this to be a lower US inflation print. Otherwise, a hotter one is going to put us nowhere near. So,
Oh, wait a second. I said 4,500. So
Yes.
if gold goes higher on the lower print of inflation, the closest is gonna be mine.
well, maybe.
We didn't say how close. We said the closest from three of us.
Yeah.
Anything higher than 4.5, I'm winning this bet.
I mean, if this shoots up 4.5, I'll be impressed. I will be
Yeah.
impressed.
It's actually like it was almost 4.5 yesterday.
Do you still use Season Axe?
I use
Or not anymore?
it. I haven't looked at it since spring, actually, to be honest.
Okay. I wondered if there was any kind of event seasonality around CPI, because sometimes I look at the NFP one that you can get, but I don't know if there's a CPI one.
I'm looking at 4532.
Just like we can ask for ChatGPT or Claude for like getting the seasonality for CPIs, for example. But the
Very true.
CPI is usually higher, obviously, after winter holidays. It's usually
Yeah.
high in the middle of spring. And in summer, I'm actually not sure about summer, because summer is a really weird period in general. Usually for me in summer, August, like July is the slowest one, which this year was 50-50. It was like more consolidative. August, last year, July I had negative, June I had positive, and August, half of the months I had consolidative, and then the last 2 weeks was a blast. It was great. But this year I didn't look at the seasonality since spring, because actually anything that was happening during the beginning of the year with hormones and everything was out of the seasonality.
Yeah, that's true.
So I was like, I don't really see the point.
That is fair.
I am expecting, if the inflation is lower, I'm expecting the all-time highs on NQ and ES.
Mm-hmm.
Oh yeah,
You?
for sure. Yeah, if we see a print lower, then yeah.
Yes.
Where are we on Nasdaq at the moment?
And I don't think we're gonna see anything higher, because Kevin Walsh was quite like soft, last time regarding the policy as well. And last time we had a negative inflation, if I'm not mistaken, like one time. So I'm expecting the continuation of a little bit lower prints, to be fair, for a little bit before it picks up again in autumn. So let's see. about
Yesterday, ES shorts was so good. It was fine, even though it was
Did you-
before CPI.
Did you try it?
that. Did I
No.
show you?
If I would have
No.
taken it, I would have screamed it in the group, but no, I was looking at it going. Because the gold took all the patience yesterday.
I know,
Yeah.
I was short gold yesterday. That's what I did.
Yeah. So I'm guessing you're in the same shot then during the NY session.
Today?
Yesterday.
Yesterday, I think so, yeah. No, actually, it was post. It was like the second half on New York session for me.
Oh, okay.
So it was, what time did I close this? It's today. It's yesterday. Like in the evening before the market closure, actually. I was short. That's the morning already. I was short here to this part. This side of the short. And I was expecting it to have the lower low. So my target was just a couple of ticks below this low actually, which it didn't reach. So it started to pull back and then it was more volume and I'm like, okay, you know what, I'm gonna get out.
I was targeting the same low, Anna, yesterday.
Yeah. I
Yeah.
was sure. Yeah. So I had
Went
this
down.
run down like from this shoulder. Did you trade before or after? Because I only got in a little bit later.
I was so early in the sell trade that it started ranging,
Wow.
and you can see the screenshot in the group. I was just 0.1 point away to get stopped out.
Ah, yeah, I
But it
saw
went-
that. I saw
yeah.
this one.
That was a trade. Because I saw that a lot of positive delta in the low volume areas, and the price was not doing anything. I was like, either if it stops me out, it might be a good read to see that what went wrong or what happened in that area. So I just watching that if you want to kick me out, better kick me out properly so I can at least write something. But it did went in the profit area. But it was more of like 1:1 trade, not good RR. So we have CPI in 4 minutes. Let's see. And don't gamble, guys. Don't blow your accounts. Make sure to, if you are in trade, make sure you put your stop to break even. Even if you hit your break even, you might lose a little because of slippage. Or if you're holding it from like from last week, you are safe. Make sure to manage your trades. And what should be the right target for today's stream? Let's make it 60.
60. It's a lot.
Yeah. It's
Is it not?
yeah, it is, but it was so clear that yeah, it is hard. So let's do 40. Because Jonathan said it's tough. He is taking care of you guys, so let's do 40. And if we do 60, we do another account.
And it hit my target.
Oh,
Yes. Before the CPI. Amazing.
Good timing, that is.
Amazing.
Great time.
Yeah, look at this. Like, it's just like one tick and started to pull back. Great. I don't need to hold this through the CPI. Fantastic. Completely out of all their longs now.
so if you see something after CPI move, let's say price recovering back and you see an A+ setup, are you going to risk something which you made today?
Yeah. Actually, no matter, like, it depends on the day. If I see that the day is like really going harsh, you know, like you back and forth, and it's like the profit is super difficult to get. And for example, the market is mainly consolidating, for example, and I'm like, I was lucky to get, for example, you know, like the profit that normally like I wouldn't, then I'm not gonna get in the trade. But if it was good trade before, then that afterwards I'm gonna risk part of this to do another. And actually, like, I raise it a little bit the more profit I make, like not fully, but on some accounts I have flip accounts, so I raise it to like flip this.
Yeah, makes sense. Good. Okay, 40 seconds for the CPI.
I
I'm
swear
just-
we're gonna see all-time highs probably. And now imagine I say it and it's like 300 ticks down. Come on, bearish candle.
That's what I'm waiting for.
Yeah, Jonathan's gonna wait for
And then
some
we can go-
correction then.
Clip it, right? You need to say that exact thing again in about 10 seconds. So that's-
Wait. Wait, let's see this. We're gonna see the all-time highs. Wait a second. Wait for
Look
it.
at this 14,
Wait for
15, 10 seconds more.
I was too late, too early.
Oh, the volume is coming in already. Oh, the candle is printing, buying. There is buying. The candle. So
That was-
scary. Look at this. Oh, shit.
Coming on forecasts.
Yeah, I swear we can cut it.
Look at. So your
With it.
exit was good.
Yeah, exit was perfect. Like exit was right here before the CPI actually.
Yeah.
But wait,
And
I'm
someone was
actually- I'm-
saying, yeah.
I'm
Tradeify
curious
TV wanted
about
me to full put.
Samsung. I'm curious about. No, it was not all-time highs. It was just this zone. No. I was like, maybe it's gonna like just tick it to the all-time high and drop, but no, we didn't reach the all-time high yet.
Look at a lot of buying stuck at the high.
Yeah. Look at this
Now.
gold candle. Wow.
Yeah, there's no change to the forecasted. Came in actually, core inflation actually came in 0.2% as expected, above there's 0%. Previously, inflation rate is 3.4%. So it actually just came in as everything was expected to. Inflation rate month on month came in at 0.1% as well. So obviously it's above previous. But came in pretty much online.
Right, so it's above previous,
Yes,
but it's
above
in line
previous.
with expectations, more or less. But expectations
yeah.
was a little bit lower. On the yearly basis, they were
On the
expecting
year-on-year.
0.1%,
On the monthly it was a little bit.
NQ did
Off
the
the side.
same. Both side
Yeah.
wicks.
Yeah, I'm looking at NQ as well right now.
Like so for someone
Comes
who
down.
is placing the buy stop, and sell stop order, I'm just praying for them.
Yeah, you would have got cooked.
Yeah.
That's
Yeah.
why you don't do that.
Yeah.
No, I rarely do it, Jonathan.
I was telling Ayush a story,
okay,
I
yeah.
think, before you joined the live stream. So before, years ago, I was like figuring it out that why do I try to predict the direction? I can just place a buy stop and sell stop order, in like above and below the current price. So one of those is going to work out. So I stopped doing this after one CPI. No, it was a non-farm. It was not CPI. It was non-farm, but doesn't matter. So the candle did this, this is the price. And I had a buy stop and I had a sell stop. So the candle does this, like 1, 2, and it's go back to the middle of the range. And like 2 of my orders didn't reach stop loss, and most of them are now in the drawdown. And I'm like, and it didn't move until the end of the day. It was stuck in this range.
Yeah.
It was like, I'm never doing this again. I'm
No.
never doing this.
Yeah, I
Same
feel
for me.
everyone
Like
does that.
I think I put the stop orders, and the drawdown was $2,000 in those prop accounts, and I was in $4,000 loss. I was like, how is that possible? The candle was so powerful. I was at 4,000, but the limit is 2,000.
Oh, so the slippage was like twice the size of the
Yeah.
stop loss.
Yeah,
Wow.
because I placed 5 minis up and down instead of micros. So we're gonna wait for this candle to settle down then. We can plan the trade. In gold, I wish if it goes much lower, then we can look for longs.
Or if it goes above and closes above 44.90. We had a big volume cluster right here at 44.90. That was right before the CPI, or right on the CPI candle actually. And the previous highs are here, and those highs were rejecting this consolidation. Wait, if I'm gonna go to the higher time frame. So it was basically rejecting the value area low of this range. So if you look at the volume profile from this, it's basically at the value area low that we got the previous rejection, and then 45.10 is the next one. So I'm expecting the rejection around 45.10. Or if we close above 45.10, then we go into 45.50s, 60s, I'd say. Oh, look at this week. What is like? It's like 440 ticks.
Mm-hmm. I might think we might fill this wick. Not right now, but maybe at the NY. That's what usually happens.
I am expecting the rejection from here, so.
Mm-hmm. Oh, Lil Master is saying, I don't even know what happened. I was in long for the CPI and my trade closed automatically, but it says I made 2.5K. I mean, congrats. If it doesn't have any consistency rule, then it's a win. But you can't do that in every CPI.
Jonathan, tomorrow is PPI. So what do you think about PPI and what's your take in general on the PPI data? Because, for example, I trade CPI sometimes. I never trade PPI because I feel like every single time I trade PPI, the price is just like going sideways. And then we have this helicopter kind of moves, and the price is like, it's barely reacting, or if it's even reacting, it's like kind of like this, but without any direction follow-up, it's just like afterwards ranging in both sides.
Jonathan, you go first.
Yeah. You sure you don't want to take this, Ayush? No, it's I think because the Fed don't talk about PPI as much, but PPI is still quite important because that's a more sort of forward-looking piece of data. It's more up to date than CPI, so it probably should take that into consideration a little bit more than CPI in general. But because that is for anyone that doesn't know, that's the producer's price index. So it's basically how it impacts businesses, and if businesses are seeing higher prices and it costs them more to do business, they usually pass those prices on to the consumer, which is what we usually see in inflation. So CPI is almost like what's kind of been confirmed from PPI, really. But yeah, PPI just doesn't seem to get the bigger reaction. I don't know whether that's because there's a lot more made out of CPI, especially when it comes to things like when the Federal Reserve talk about inflation and stuff. So they obviously mention core inflation rates. They mention core PCE, for instance, as well. So yeah, I mean, last time we had a bit of a reaction, but PPI is usually kind of like a leader into what happens with CPI. So both are very difficult piece of information to trade, because like we're seeing at the moment, I guess that inflation print coming, it is technically higher than previously, but the market's reaction right now is, we're seeing bond yields drop lower. That's probably just because it was forecasted, even though it is technically a little bit hotter. So yeah, I mean, both very, very difficult. I value PPI as well. Like I said, it is actually a bit more of a forward-looking inflation metric versus CPI, but it's just not taken as seriously, I don't think. But when we look at the forecast here as well, PPI is expected to climb. Again, that's probably due to more the fact that oil prices have started to climb again. Core PPI is also forecast to come in a little bit hotter. Year-on-years are different, a little bit lower, but month-on-month are expected to come a little bit higher. So I think it's more about the deviations away from the standards. Maybe sometimes when we look at the PPI and we don't get strong deviations away from the forecasts, then the moves can be very muted. If we get big strong moves, like if we take a look at the non-farm payrolls last week, obviously very strong deviations away from the forecast, so that's why we had very large moves in the market. So yeah, I think it just depends on that really. Going forward, obviously the market then digests that, and if it's consistent, so like if we see a PPI that is consistently higher over a period of time, then that would be leading into a higher CPI over a period of time, and so on and so forth. So I think in individual news cases, like when we're looking at it from a day trading perspective, all that matters is the deviation from the forecast. From a swing trading point of view, you're looking at kind of like the overall basket of inflation, you're looking at the overall basket of employment and GDP to give you a bit more of a overview of the longer term outlook. Sorry, I'm going to come. So yeah, I think it just matters about that deviation really. And then if we're looking for it a little bit more long term, so if we did see yields have been falling, so really long term, looking for that US dollar weakness, that reflects really nicely in this gold move that we've seen. And it's just, if you get that deviation on the shorter time frame, it just gives you that little bit of a burst higher or lower, depending on obviously the outcome. But right now, we've seen a market that's reacting to this with the same kind of reaction we've had recently. Just keep selling the US dollar. There's nothing there that's going to change the outlook there. And that's the way I like to look at these events. It's like, okay, how far, first of all, does it deviate from the forecasts? How far is it deviated? Does that change anything from a globe, like a global like overview of it? Because that can give you your short-term time frame and your higher time frame sort of outlook perspective anyway.
Super interesting, because people usually cannot, even like macro guys, they cannot really explain the PPI, and the relationship to CPI and the overall economy. So that's great. It's a simple question, Ayush. Do you trade PPI?
You mean during the PPI or after PPI?
Well, I mean the PPI in general, because for example, I don't trade after PPI usually the PPI day is like completely to the trash to me, because it's like barely moving anything. It's like recovering after CPI, and after PPI is dead. Long term, I understand everything that you explained already, that it makes sense. But within a day, for example, this day is completely out. You do? Because
the thing is, it depends on the time frame as well. I think you trade on the 5 minute or 50 minute, as far I know, and it gets tough on that time frame. But for me, on the 1 minute, 2 minute, it's always, the trade is always there. As I said, the only days I don't trade is Friday and Saturday, and Sunday. So no. So I mean, I understand that intraday traders or swing traders don't like to do something when there is news or the data stops them. But for me, on lower time frame, that is trade. But every time I've seen during the news events, I do have to wait a lot to get a setup. On usual days, it appears after 10 a.m. But on the days like CPI, PPI, it might take 2-3 hours just sitting on the setup, waiting for that one scalp on 1 minute, and then close the day. So yeah.
Maybe I need to start trading 1 minute.
You used to do already.
Going back to the
on
basics.
Gold? On gold, I'm not a fan of 1 minute, because micro scalping is not possible on gold as far I have experience by getting slapped many times. But on NQ and ES, it's possible there. So I'm just gonna treat gold 5 minute, 15 minute as 1 minute chart. And the current candle is so ugly, I don't like it. But maybe I might see if we get rejection after the NY session, we might come back to this zone, I feel. So even if it goes long, right, let's say with gold volume high and tap this level, we might see price coming back to this range, or maybe in this wick after NY open. Something like that, same on NQ and ES, because there is no volume. I know there is a lot of buying coming in, but let me shut it. Okay. There is very less volume in this area. They might act as resistance, and during NY we might see price going back to fair value. I don't know for how long we will be in the range on NQ and ES, but if I see rejection and resistance and price is giving me some absorption kind of setup, it might target this wick low on the NQ and ES. But right now the candle is so ugly that I don't want to use my brain in it to analyze anything.
Yeah, the
maybe
worst
we can
is only the worst is only gold. Right
no,
now.
NQ is more worst. Everything.
Not sure. I haven't reached my short level, and we had so much volume now coming in. Bullish volume. Technically, I can actually take a short now for gold. Which I'm not gonna do.
I want to check something. How does it looks if I place my bottle? I thought I'd look okay. You can see I'm upside down. Wait.
No, you are just really, really long.
Yeah.
Go horizontally.
Yeah, look at this. I look like a CPI candle.
I figured that in my office they have cups that are saying "Thanks God it's Monday." It's like a trader cup, you know, like it's Wednesday, but
Yeah.
that's exactly how I feel.
Luna is asking the question. I have same. I don't even know that as well. Maybe our British friend can help us. What do you think? What that is, Jonathan?
I've not got the chat up. What was the question?
Oh, what is that? Butcher.
What is that? What?
BUTCHER. He's searching.
I don't know.
The translation.
Let me go on the chat. Have a look.
Luna is saying no. See, if it means something or something really bad, then I'm really sorry. I don't know what that is. Is that a coffee?
Oh, she says, what is that butcher? As in, like, no stop loss butcher. She's like, that's someone in the chat.
Yeah.
Because they're talking about double chocolate cakes, I guess, or something.
I was reading half
It's just a cake stream. Maybe we should start baking something on this stream.
No, the thing is, Glenn, you guys talk about anything in the chat. It takes 2 to 3 minutes to analyze what you guys are talking in chat. I think markets are much easier than the chat. Sometimes. You all should try. Let's see how many likes we have. Oh, we have 20 watching, but 13 like. I think 60 was the good target. Jonathan said 40.
You guys, I
Must
don't
be
want a
nuts.
giveaway. Feels like they don't want a giveaway.
Are you too good for the giveaway?
The idea on gold right now.
Gold candle
Huh?
is- Carry on.
No, you go. You go.
No,
first.
you carry on. My throat hurts, so you carry on.
Okay. Nothing. You go first. No, I'm gonna say it. So there's a lot of buying stuck at this, level, and there is no follow through yet. And if price accepts buying higher, then I think it might fall directly from here. So just gonna wait for more candle to
Oh,
print.
gold or
Gold, yeah.
gold? I'm actually
Yeah.
looking potentially for the short on gold as well, because
Yeah.
we had this last candle like over high during the CPI, first like half an hour now. So in this 1 minute candle, we had a lot of buying pressure. This delta closed at 451 contracts within like 1 minute. And last time as well here during this, like the first minute of the CPI, we had also a lot of buying pressure within a candle, and it was bearish. We had a lot of buying pressure one more time, just above the highs. Look at this, we had basically just over high. Like people started buying. I think because of the CPI, they expected a follow-up, continuation of the upwards movement. So they tried to kind of catch the continuation of that, which failed. So we had a bearish candle, which afterwards was followed with another bearish candle and with more bearish candles. So right now we are also below the monthly volume right here. So this is a monthly dynamic volume at 44.90. So this whole zone is pretty much acting as a resistance now. So we had a lot of selling, like buying absorption, let's say like this, right here. So buyers were like, retails were buying, and they allowed them to buy. But afterwards we had a follow-up with like several bearish candles in a row, which once again here we had still positive delta, like a next, apologies. That was a little bit too much. 1 second. Losing the chart a little bit here. So there was still bullish delta, like 50 contracts more asked than bids within one, and it was a pretty bearish one, like pretty aggressively selling candle. And the next one as well. So as long as we stay below, I think 44.90, I'll vouch for sells. I think for gold.
Same idea, but I'm not gonna do the same mistake I made yesterday. It's gonna wait for more selling information, then we'll go for it.
Yeah.
So what you are targeting? What will be your TP or the data low of the candle?
Well, at least this 44.67 would be just for scalps, and normally I would be still waiting for. Well, it doesn't load, so
It's
like
going.
This lows. Yeah, at least this one here. Like let's say this lows, and if we go to this lows, then even lower. So at least the lower of the CPI candle, let's say, and then overlow from yesterday, the original target that I had, and then 43.82. But the second option for me would be still that we reach 45.10 and then drop from 45.10. That's a second option, because that's a point of control of the weekly range that the price still didn't test. So they tested the value area low again, but we didn't test their point of control of it. So that is a second option that I have for gold. 45.10 and then 43.80 from there.
And I'm gonna switch to, give me a minute. XT Inc. So I want to show you guys something which I ordered, and the topic is in the chat, so it's better to mention it. I think it will help everyone. XE3. So I ordered a device which sticks beside my phone, and I can upload the books. So I'm not a book person, but I'm trying to be. So, and I don't like to have those libraries in my room because I know I'll never be a book reader. So I ordered this, so it's like going to stick on my phone on the back, and I can read anything anywhere. It can store thousands of books in it. So instead of scrolling, the scrolling is the biggest enemy of any person or a trader. So what I'm going to do, if I'm scrolling like this, I'm gonna turn it around and it's gonna scroll this device. Let's see. I'll show it to you guys if it arrives on time on the stream. And I have some books ready as well, so I'm quite excited and trying to be a book reader.
Have you tried listening to audios? Like
I tried, but I do it. But the thing is, listening and reading have really different approach towards improvement. Now I'm a good listener, but not a reader. That's the thing. So I tried it.
If you're a good listener, but not a reader, what's wrong with audiobooks?
She got a point, but the thing is, if I do it on my phone, so okay, I'm gonna share trading view again. So the thing is, I already have many audiobooks in my phone, but because we have many apps like social media, if I get some notification, I get distracted and I go there. So it's a device which it's like digital ink. It shows only PDF and feels like paper, and there is no extra app in that. So I'm gonna try it. And if I still be the same person, then it's gonna be a loss. So yeah. So there is no confirmation for reversal yet.
Not really, no.
And 4R looks really. I mean, this candle is rejecting at resistance, and we might get the reversal. But the thing is, on the 1 minute, the take profit is very close. Somewhere around here, which Anastasia is targeting, maybe at this point of control, something like this.
Mm-hmm. Yeah, exactly here.
So isn't that gonna be the 1:1 for you, the risk to reward?
Yeah, but I'm not taking it yet. I want it normally to go to, if you look at the futures quotes, at 45.10, and then take a short from here. No, but I can normally take a trade which is, let's say, 1 to 1.5 risk to reward. Is not a problem for me.
Okay.
I don't need necessarily to go to 1 to 2 or higher. But
do a nice saying RNT
in general.
Yeah.
Euro dollar broke out. So from currency perspective, we saw a nice breakout of the move. Continuation of inflation print. Inflation print, sorry. NFP print. My mind is not with it today. NFP print was over here. Obviously, this is the latest inflation print. We broke out of all this accumulation area in here now. Just set some alerts down here just to see how price reacts back down at this support. See if it holds. Might be able to get back on the dollar short train over on the currency market versus gold here. Gold's looking pretty strong still. Starting to see yields start to break out.
Especially now, but 45.10.
But I still have that doubt that price might come back in the range after, or not right now, but after some time. About gold.
Yeah, I just think their overall data for the US hasn't been good. But when you look at it from not just from this inflation print, you look at it from the bigger picture, it's still not fantastic. Look at the dollar index at the moment, just basically consolidating above this support band, which I'd never usually like. I like it when price comes into a support, there's some kind of aggression at that point. When we see sort of strong consolidations right at the resistance level or support point, I don't really like that. So it'll be interesting to see how Euro plays out. If we do see this, if we see US dollar index, obviously Euro dollar is just the inverse of this, but I like the idea of potentially seeing Euro up at 116.25 to 116.50. Largely down to the fact as well, we've got huge sort of aggressive commitment of trader report signal. Looking at the euro, we can see hedge funds aggressively short the euro at the moment, but when they are so one-sided, we can see often quite a sharp reversal of that. This chart loads up, I can show you. I have too many tabs open at the minute. Spinning wheel of death. There's this. Obviously, we looked at this as well. Like, crowd very heavily long. All at the moment. Let's get rid of all these. Come on.
Gold rejecting back. Still positive delta at highs. We didn't clear up the Bitcoin high. I think one more push up. Robot looking at Bitcoin.
Bitcoin is dead. It's still in the same zone. Like 3 weeks ago, I did analysis for Bitcoin, and guess what? It's still valid. Like nothing pretty much changed. I have the same analysis for Bitcoin still after 3 weeks. It's exactly the same zone for longs that I would take before, and like nothing changed. And then I'm still targeting it to go to 67.8, and then to 70.19 or 71k, and then from there I'm gonna look for short. So I'm still bullish. If our Jonathan would be here, he would say, like, "Are you long Bitcoin?" I'm still long Bitcoin. It's been 3 weeks.
And he's here.
Oh, look at this.
Just said it. Just some time.
Guys, I'm telling you, he's listening. He's listening in the background. He's always there.
Always, always.
I literally just said, if Jonathan would be here, and he's right here. Like 5 seconds ago. Oh, what a timing.
Right, what's up, guys? Interesting moves on gold here. Interesting moves. So what are you talking about? I saw you were laughing when I come on here. What's going on?
I was saying that it's
What did I
been
miss?
3 weeks, and I'm still long Bitcoin. If Jonathan would be here, he would be like, "Are you long Bitcoin? How are you long Bitcoin?" Well,
yeah.
I'm still long Bitcoin. 3 weeks in.
Okay. 3 weeks. Well, yeah, I don't think it's a bad trade. I don't think it's a bad trade. You know, if history is a guide, then we might get a move higher here. It's not looking strong though. Not looking very strong. How you guys been today?
Good. How are you?
Good, very good.
Yeah, I'm good. Good. We just had the CPI numbers come out. It's haven't updated myself on that. So came out as expected, I guess.
In line with expectations. So
Hmm.
I am.
Yeah. So
I'm aiming for the all-time highs for the indices today during the New York session.
all-time high for indices today.
Yeah.
So the fact that CPI came out Yeah, S&P 500 is so close to all-time highs. Nasdaq though, I don't know,
It's not.
but yeah, S&P 500 very close. Yeah, might break out today. What are we thinking on gold though? Because gold is getting closer and closer to where I might be considering buying. But I think if we get in here, we have to kind of like expect a reset, a reversal, at least a short-term reversal. Maybe a move back down to, wouldn't be completely surprised if we get a move back down to 4.2.
I think we don't see a screen.
Yeah, but you don't see my screen. I'm not really showing anything, but feel free to switch. Oh, I'm not even sharing my screen. That's why.
Yep.
That's why you can't see it. I don't know about you guys, but this is why I like technical analysis. My screen is blue and black. Yes, Roman. It's the one going crazy right now. Can you see that? That's the one. Yeah. So, this is why I like technical analysis, right? Because with fundamental analysis, you can, especially in the current environment, you'll just be all over the place, right? It's like, imagine being an oil trader right now. Trading headlines, trading news, trading the fundamentals. You have to be, you have to be thinking, 3 or 6 months in the future, and like nobody knows. It's just going to be pure, speculations on whatever's going to happen in Iran. It's just going to be very, very difficult. I mean, Jono, you're looking at the fundamentals. You're a macro guy, but in a situation like this for oil, wouldn't you say that it's just very messy, right?
Yeah, it's very hard. It's very hard to be aggressively like involved in oil prices. Like if you were trying to trade oil, it's going to be you've almost got to predict the unpredictable, right? Because like you just never know what's going to be said. I mean, I think for me, whenever we saw, for me, the escalation was always. It's always there. It's always bubbling. So I would much rather be on the long side of oil. So when we saw those really strong declines, where we saw like oil back to before pre-Iran levels, I always thought that was a bit suspect. When I always like to, when I think of trades as well, I always think like sometimes I look at price and go, that's a bit weird. Like, why is we've still got. Again, I always say the question, like, what has changed, right? Has anything actually changed? And in that situation, all there was a potential deal, but nothing had been signed. You had the US saying one thing, Iran saying another. So to me, that was always an option to see oil prices move back higher. Did I expect the re-escalation in terms of like bombing and stuff? No, but that obviously is what was the big mover behind the kind of re-acceleration of that. And it's kind of like the same situation now, right? We're seeing it dip a little bit. Market is now kind of trying to price in ideas of a deal, but then again, we're starting to see oil prices rise again. So now maybe the market's thinking, is there actually going to be one this time? So yeah, sorry, my voice is going.
Yeah, no worries. Like it's interesting though, because when from that perspective, obviously, oil is quite volatile. It's all over the place, even from a technical perspective. I mean, sure, it's respecting the levels quite nicely on some of these moves. I mean, we have a decent bounce at a good level here, and then we have obviously that rejection at resistance. So some of the levels, some of the time being respected quite nicely, but still it's very much reflected in price how chaotic and unpredictable the situation is. And you know, one thing that I really like with okay, Jonah's gone. You know what? He probably needs a break anyway because his voice is you know, he's got a sore throat today, so probably need a little break. So looking at gold here, and kind of go back to the idea that, you know, why I like price is because focusing on price for me always comes first, because I don't really need to know why a move is happening to be participating in that move, right? Now, of course, if I do understand why the move is happening, and it's happening because a fundamental factor that supports the direction of the move, then I can maybe, you know, add a little bit more size to a trade and things like that. But what's stopping me from going into gold here is just my emotions, right? Because from a technical perspective, especially if we start seeing something where we actually start to see a structure being formed here, and then perhaps another break to the upside, that tells me that I kind of want to be long on gold. But then we saw that, you know, 80% of retail traders are long on gold right now, which tells me also that we might need a reversal, you know. And if we look at the bigger trend here on gold, let's go to the weekly. Like I don't know, it's difficult because this move here, you know, the move that we got from these lows all the way up here, you know, that parabolic move, it almost went, you know, 90 degrees straight up. A completely parabolic move. It was kind of destined to have some type of blowout top, right? Now, if we measure that move as, if we try to find the beginning of the move, right? I don't know about you guys, but probably we can probably look at the breakout. You know, this is where the level broke, but it you know, it kind of started gaining momentum even before that. Well, around here, right? So let's say that this is the move somewhere around this area. I'm just going to put the fib, you know, roughly around this area, and then all the way to the top up here. We haven't even tested the 50% fib, you know. So we retraced to the low 30%, and I kind of feel like we need a bigger reset in the price of gold, or we need to have very clear fundamental factors to drive gold higher. And the problem I have is that when this rally was happening, when this parabolic move was happening, everyone was an expert at the dollar devaluation trade, right? The debasement trade. Everyone all of a sudden knew what it was. I had no idea before gold that was even a thing, you know. And then all of a sudden, everyone's like, "Oh, it's because of the debasement trade. It's because the central bank's buying. It's because this and that." And I'm like, "Okay, I know that now." Sort of like the carry trade unwinding back in, I believe, 2022 in yen, or 2024 maybe. That was obvious. Everyone was an expert at the carry trade when it started unwinding, right? And I'm trying to think, who are the future experts because of this move? Are we going to see gold trading at, you know, 6K, and we're going to get a move like this, and up here we're going to get some type of new experts, right? And you know what I'm saying? For this to be the bottom on gold, we need to have a catalyst, right? We need to have something happening, and I don't know what that is going to be. Now, the good thing with technical analysis is we don't need to know that. We don't need to be an expert at anything else than price, okay? So what I'm looking for is, I'm trying to put my emotions aside, trying to put all my biases aside, and just trying to figure out what is price telling me here. Because I want to buy gold. I want to buy gold, but I probably shouldn't, because there's no, you know, clear confirmation. So I don't know about you guys, but the question here, and I'm gonna throw it out to everyone and everyone in the chat as well. Like, when is it definite? Like when is gold back in a bull market? When do we go all in on gold again? Like when is that happening? Anastasia, you probably have a.
Are we talking long term?
Yeah. Well, I guess if we're talking about, let's say you want to be trading with the trend, even if you're on the lower time frames, right?
Yeah.
So,
yeah.
And so the question is now, what's the dominant trend right now? I think it's bearish.
For me, it's bearish still. Yeah.
Yeah. So and I think we're all kinda in alignment with gold being tilting to the bearish side, right?
To be honest, for me, like long term to determine, or let's say 4-hour time frame to be determined as a bullish, like 4 hour and higher, it needs to be at this point a combination of macro stuff and text. Because for the macro, like I cannot really trust that gold is gonna be bullish on like long term, mid term, if we're not gonna have anything clarified with like rates, for example, and the US dollar balance, and the strength of the US dollar, because it's just not possible. If it's gonna start leaning towards the dollar being weaker, then definitely we can have a more money inflow in gold again. But up until that, I don't really see it happening. And we talk like in the meantime, I usually trade from zones to zones. So I determine my areas in a sense of like what, like if, then. So for example, I have several key levels personally that currently, if we reach 45.10, I'm still looking to sell from 45.10 today, for example. This area for me is bearish. So if you get here, I'm looking for the correction, and correction depends. I don't know, 43.80 to maybe even 42.50 to be fair. Like, because I'm still more on the bearish side. But then if we, on the 4 hour and daily close and some things happen with hormones, for example, or rates of whatever, or inflation, you get more brains of those, then more information, then okay, I'm gonna be looking for the price to break, for example, 45.60. And then from 45.60, I'm gonna be bullish until 4,700. And then if we break this area here, I'm gonna be bullish until the next high is at 4,900s, 4,950s. So I'm like currently in the, like, while gold is, like you said, more lenient towards the bearish side, I'm taking it as a bullish piece by piece. Like from here to here, I'm bullish, then we'll see. From here to here, I'm bullish, and then I will see what's happening. Let's say like this.
Yeah.
Because like if I honestly looking at the last year for gold, if waiting until definitely everything is bullish, the structure, the macro, chances are we're not gonna catch this move anyway, because if it's gonna start moving, it's probably gonna start flying. So the chances of catching the big piece of the move is gonna be very miserable, to be honest, in my opinion.
I'm looking at a few interesting things here. We can switch over to my chart. So there's two indicators that I like to use. It's primarily the RSI, and yes, the RSI is very simple. Everyone uses it, but it's the RSI. It's momentum, and if you know how to read momentum, you can use the MACD, the RSI, or whatever. Right? It's just a momentum indicator. And then I like to add a volume indicator. In this case, it's the accumulation distribution indicator. It says RSI and divergence. That's just because I've taken the RSI indicator and then I've put it into Claude and I've asked it to do some adjustments to it. Like, for example, I don't use the oversold and overbought. So I've removed that. I don't need that. And then for the volume, I can go in and I can choose OBV or ADA line, or use the raw volume. But here, what I like to do is look at the accumulation distribution. And if there's really three things on this chart that for me would be or is showing me something interesting here. So first we have 3 moving averages on here. The teal line, is that even a thing? Teal? No, you're British. Is that English maybe?
Yeah, that's the color. Yeah.
Okay. So is this a teal line?
Yeah, I'd say so. Yeah.
Okay, good. You know what? I'm gonna go in, and I'm gonna change the color of that one because it's, I don't know. Can I change the color of it? How do I change the color? Okay. Slow SMA 200. We will make it orange because I know how to pronounce that. Okay, so we get the orange line here. That's 200 simple moving average on the daily. Then we have the 20 and the 50. So what I'd like to do, what I'd like to see first is that's just a technical signal. Now, in of itself, it's not profitable at all. But I'd like to see the 20 cross above the 50. That hasn't happened yet. I'd like price to be above the 200 simple moving average, and that hasn't happened yet. But we do see something interesting when we look at the accumulation distribution line right here, and that is the fact that it has actually broken above some interesting highs right here, which shows us that looking at volume and then looking at the candles and the the strength of the candles, the buying pressure is obviously increasing, and that's most likely because of these two big daily candles right here. And then we also see RSI is now potentially trading within its bullish range. So if we look at gold here, you can kind of see that there's two clear ranges within the RSI, which is this one. That's going to be the bullish range. And then we have the bearish range is 60 and maybe it's 20 or 30. So that's going to be the bearish range. Now, usually what you'll see is in a bear market, you will see RSI ranging within the bearish range, which is between 60 and 20. And then in a bullish market, it's going to be ranging between 40 and 80. And it holds quite true here on gold. And we're talking about trending environments, because in ranging environments, you're just going to see RSI fluctuate across these two RSI ranges. So it's interesting that gold has, for the first time since February or around January this year, RSI went into the bearish range and started trading within here. This is the first time being in the bullish range. Now, what I'd like to see is a reset in momentum and a retest of the previous range highs. So the previous range highs is sitting right here at around 4,200, between 4,200 and 4,150 is that previous range high. So if we can get that, a move back down here, that might give us a reset in momentum. Momentum comes down and hits the 50 level on RSI, which means it's still within its bullish range. And then I want to see a bounce here, and I want to see price continue upwards. That is the first sign that RSI is now firmly within its bullish range. If we can get all of this and then reclaim the 200 simple moving average, I think that is a very good sign that we are perhaps back in a bull market for gold. So the final confirmation for me would be a reclaim of the 200 simple moving average. Now, that is from a long-term investment perspective. What I'm going to do at that point is I'm going to increase my gold holdings from 0% to 20 or 30% of my investment portfolio. And that's also the green light to swing trade gold to the upside, which means I'm probably going to take a low risk trade from 4,200 and take profit around 4,450. And then if we reclaim the daily 200 SMA, that's my green light to increase the risk on my swing trading. And I'm basically just looking at, holding through this move, but swing trading from here to here and from here to here and here to here. So being fully invested in the trade and then swing trading within that trend. Does that make sense?
Yeah.
Is anyone listening?
Yeah.
Yeah, no.
It's too advanced. Yeah. Okay, guys. In the in the chat any questions that you know, anything that you need help with? Is there anything we can help you out with here on this live stream? Please feel free to just hop in the chat and
I'm gonna add something to
let
your
us know.
gold analysis on long term, because you're looking at our RSIs and EMAs. I'm looking at the cumulative delta, which is basically they're showing their accumulation of like order distribution across longer period of time. So if you look at the cumulative delta over like some previous moves on gold, so let's say that I delete all of that stuff from here. So what we
Which one is your screen? Is that? Oh, sorry. Okay, I got it now.
The white one, yeah, the white one.
Yeah.
So the cumulative delta is essentially showing the distribution of asks and bids across different period of time. So what we've seen here, for example, that price was consolidating while delta was dropping, and then it started to move up while delta was still dropping. So the fact that there was a lot of shorts incoming in the market didn't push the price lower. It was observed, and afterwards the price still started to move further up. So eventually, after every who was shorting got stopped out, sooner or later, the people and traders and institutions, well, institutions were already traders, right? They shifted to long side. They were long until the price started to collapse again. So people are usually long, like what we see here. We had a double top on the price, and the cumulative delta started to reverse earlier already. So cumulative delta was showing us that majority of orders is going short, and when the price started to respond, was essentially my reason to go short. Whether it's here, when the cumulative delta and price was started to move in sync toward the upside, that was my long moment. So what I'm looking at, the cumulative delta and the price, is either the sync when the cumulative delta and the price are moving up, for example, which is basically saying that the order flow is supporting the current upwards movement. So the current upwards movement is heavily supported by the buyer side, and the other way around with shorting. So the cumulative delta starts to heavily drop, the price starts to heavily drop, which means that this drop is actually, behind this drop, there are actually a lot of short, aggressive orders coming. Or I'm looking for the divergence, when for a prolonged period of time, the price and the delta are moving in a completely different direction. Like, for example, we had here for a longer period of time when the price was ranging, delta was dropping. That was a bullish sign for me. It means that sellers are selling actively, the price is not responding. Here we had the same exact thing. The cumulative delta was dropping, the price was not responding. It's a bullish sign. And what we see here, again, then, for example, that was the opposite diversion. So what we see here is that the cumulative delta is dropping and the price is not responding. So on a prolonged period of time, most traders are now short for gold, which doesn't mean that the price is following that. So for me personally, if you look at the order distribution, it is bullish. However, it doesn't really combine with current macro state for me personally, and it doesn't combine at the current moment. I wouldn't go long for gold because we reached some of the volume areas, accumulation areas where a lot of orders, a lot of trading was happening before for me. So I would be looking for the better entry point. But essentially, long term, currently, I am bullish because the price is not responding towards a big amount of aggressive shorting volume coming in the market. So if you would break some of the key levels for me, that would be, for example, the first one would be 4,600, 4,560s on the futures. This is futures quotes. Anyway, then the highs here around 4,780s, 4,750s, this zone here. Then and at the same time, if cumulative delta would start going up, so I would like to see the sync. When people are like, okay, you know what, it's actually not dropping, and people start turning long. In the beginning of the shift, when the delta is starting to recover, I would go long already on gold, midterm, not only intraday.
Oh, I love that. Okay, cumulative volume delta.
Yeah.
So I need to look into that, because I think you're looking at the futures obviously right now, and you're using ATAs here, right?
Yeah, but it's available on all the futures kind of platforms. So it
Is the
sums
data?
up- yeah.
Is that data available like outside the platforms? Is that, or do I need to buy that data? Can why I'm asking is because I'm thinking if you can pull that data into like an external indicator or something like that.
I'm pretty sure you can, but you need the data about asks and bids, because what it does basically, it takes the normal delta indicator. So if you look at the delta indicator, it's going to show you the amount of asks and bids for every single candle. So that's like a separate thing. So for example, on like 4-hour candle, it was like 582 asks, then positive, negative. So it shows separately. So cumulative delta adds all of this up. So this one adds it up for continuously without a break. And I also have the same indicator, but like within a trading session. So when I analyze the flow during the session, for example, to find an entry, to find the divergence or their like sync between the delta and the price, I take the session delta, so it resets every single 23 hours, 24 hours when the beginning of the trading day starts. This one, because it's a long term, like 4 hours daily, which I analyze like continuously, it doesn't reset ever. So it's continuously adding the information about the new asks and bids coming into the market and the overall balance of asks and bids currently. I'm pretty sure you can, but you do need the data. And I didn't find the indicator like this on TradingView, which actually would be working. They have some, but they weren't properly working at all. There was one,
so that's very interesting,
like hike in Ayush or something, but it was horrible.
I will. So I'm just writing a message here to. I'm working on a trading system here using Claude, and I'm missing some like volume indicators and inputs. I'm going to definitely try to see if I can, because that's quite interesting. I do think it can be quite valuable. I mean, understanding volume and using volume in your analysis, I think, is super important. I wanted to show you guys something, and we also had Jessu P had a question. Can you talk about what you're working on right now with Claude? And yes, I am actually. I want to show you something, and the reason why I can show you guys this is because this is a system I'm using for myself. I'm not selling any products. I don't have a community. I don't have any courses. I don't have any mentorship. I don't have anything to sell you. So this is my product that I'm building for myself as a toolbox in my trading and how I'm using AI to enhance my trading. So it's not available. You can't get it, but you can perhaps look at it and get motivated on how to improve your own trading with AI. If your throat is bad or whatever and you need a break, feel free to do whatever you want.
Yeah, I was gonna say I might go get a tea and stuff, so I might dip out.
Yeah, you look a little bit tired. You're like, oh, not this AI again.
No, I'm interested, so I'm gonna watch it separately.
All right.
So, yeah.
Awesome.
Thank you guys. All right, I'll catch you
Okay,
later.
so what I have is I started building for myself a toolbox, and I have an indicator called the regime index, and the way I design indicators and systems is I first want to. Where did Ayush go?
I'll take a break.
Oh, he's taking a break. I thought maybe he thought that I told him to leave. Anyway,
I'm listening. I'm interested.
Okay, good. Thank you, Anastasia. Like everyone's leaving. It's like, where is everyone going? It's like, oh, he's gonna talk about that fucking AI again. I'm out of here. All right. No, so the first thing I do is I want to get I want visual confirmation on whatever I'm doing, if it's working or not, right? So this is an indicator that I've built by combining a lot of other indicators. So I'm first I have it's 1, 2, 3, 4, 5, 6, 7 different indicators within one. So first is regime filter, and the regime filter is mostly the 200 simple moving average, right? So the question is, is price above or below the 200-day simple moving average? And then that would be a signal to go, that would add to the long or the short. And then we have an indicator called the concept of the 52-week breakout, which is basically when was the last breakout above the yearly high and how far are we trading away from that yearly high. If we had a breakout recently and we are above it, that means it's a recent breakout, and if momentum is high, that means it's a very bullish market. The breakout has just happened and we're gaining momentum. And then it's an indicator measuring the yearly momentum. And then it's the ABS momentum. I can't remember exactly what that is. And then it's the Weinstein indicator, which uses 4 different moving averages. And then it looks at the distance between the moving averages, but more importantly, the slope of the moving averages and where price is. So imagine that you have the daily 200 simple moving average sloping to the upside with price above it. Obviously, that's bullish. If price is above it, but the 200-day simple moving average is sideways, then that is a potentially more ranging market. And you kind of get what I'm saying. And then the medium time frame trend indicator looks at all of these, but then on the 4 hours, well, not as a daily, because you want them to kind of agree with each other. This is the indicator that I then take this because I want first a visual confirmation that it's actually working and the signals look good. The idea is very simple: be fully invested in the market when it's green, be half invested when it's yellow, and be completely out of the market when it's red. I run this on Bitcoin. I run it on the S&P 500, and I run it on gold. So this is also one of the things I'm waiting for. I'm waiting for this to give me a green signal. But this is just within TradingView. And then now what I've done is I've taken the code from TradingView and I put it into Claude, and I've worked for this for many months actually. And I have now been able to create a script that is back testing the whole idea, and then creates results here. Again, this is just my private site that I'm using as a toolbox, but it's very interesting. So Claude is working on this in the background and has back tested all of this. And here I have tested a portfolio of 60% stocks, 30% gold, and 10% Bitcoin. I'm still working on kind of adjusting it. The gray one is the buy and hold. Okay, so that's the buy and hold. Now, what's interesting is what happened during the dot-com bubble and the great financial crisis is what really makes this system what it is, right? Basically, during the dot-com bubble, you would be out of the market. During the great financial crisis, you would be out of the market. Unfortunately, you would be caught in the COVID crash, but I do believe that happened to pretty much everyone, right? So you can't really remove all types of risk. But what it shows us is that the max drawdown is obviously better, the Sharpe ratio is better, Sortini ratio is better, volatility is lower. And to put this into context is I'm not looking to maximize gain, I'm looking to preserve capital while growing it at the same time, because what I use this indicator for, and this is basically building a portfolio where I'm gonna sustain a somewhat of a profit long term, but more importantly, limit the drawdown of the system. And then you can see Claude has done all of this research to show me what's the best way to trade is. And important that these signals, I'm not trading them completely systematic and automatic. It's not a trading bot. What I do is I take these signals, and then I can take a discretionary decision based on the signals, where I'm also looking at, is because sometimes it's going to be false signals. Sometimes you might get whipsawed. So I do add my discretion to this as well. Now, what's cool about this is Claude has also built me a way to build my own portfolio. So you can see here, for example, let's see, where is it? You can build your own portfolio, and so I have sliders here. You can, for example, change. Okay, so I have what if I want to add to this? You can experiment with different holdings of the portfolio. So VT, for example, that's the Vanguard World Index. So let's see if we put that to 60%, and then maybe we put gold to 30%. And then we put like Bitcoin to what is it, for 60, 70, 80, 90, that's 10. Where's Bitcoin? Somewhere here. Anyway, so you can build your own portfolio, and it's really cool. So, and then you can test different assets, like individual asset, how they would be performing with this indicator. Obviously not perfect, but it does it's single indicators or single market doesn't really do great. But when you compare or when you put different markets that are not necessarily completely correlated, where one can be in a bull market, the other one can be in bear market, you're getting really great results. So this is just an idea of what you can actually build with Claude. It's absolutely insane. So what I would recommend that all of you do is just have a conversation with Claude about your trading system. What is your typical trading system? What does it look like from a visual point of view? And then just have a conversation with Claude and try to build out what you would want to have to simplify your own trading, and then try to build around it. Jessica says, why don't you give to public with a subscription? Because I'm making more money managing my capital with this than the headache of offering a product to the public. It's so much work. It's just building a whole product and marketing all of that, and it's just a lot of headache. I would rather just focus on maximizing my own capital and my own profits from my own trading. That's where my focus is. Now, I want to show you something else, right? This is another thing that you can build with Claude, which is it's crazy. So for about 1 year, I've been building a trading system generator using Claude, and I'm not going to give away all the details, but it's basically two softwares that is working together with Claude, connected to a demo account, and it's generating about 1,000 trading ideas per day and back testing them 24/7. And so I can show you here. We have this is the actual what it looks like, the operations trading tab. We have the trading happening right now. So this is the live trading node, and you can see that this week I'm up $2,400. This is on an actual account, but obviously you see almost 2,500 on the week, but only $2 on the month, which tells you a lot about the volatility. Win rate is decent, 52%, still down, but it just shows that I right now have 30 strategies connected to a demo account on Oanda. I got 2 open positions. You can see all the strategies, and all of these strategies, every single strategy has been created by Claude. Put into a backtesting software. The ones who survive gets then put it into a software that trades these markets live. Okay. I currently have 25,000 strategies that has been tested. And if we go to the strategy catalog here, you can see all of these strategies. And the strategies, most of them, let's see, should have all the details from the back testing. So you can see right here, this is a strategy called the prior week high-low break.
All of this is built in Claude.
Yes.
And he's putting it into the backtesting software.
Yeah, everything is automatic. So once a week, Claude does research on ideas to test. And then it takes those ideas, which is like maybe 2 or 3 main ideas, and then it puts it into a software that backtests thousands of different variations of those ideas. And then maybe 0.5% looks good. Those 0.5% of the strategy, which is like out of thousands, maybe 1 or 2, it gets put into a trading software also connected to Claude. That trading software is connected to a demo trading Oando account, and it forward tested it. And then it compares the forward testing to the back testing results. And if they align, you have a profitable strategy. And it's all automatic. And I get sent an email once a day from Claude with an update on what I need to do and the errors, etc. And if I click this strategy, it's insane. You're gonna see like the sharp ratio, this routine of all the statistics. You have the equity curve of the back testing, you have the drawdown, you have it even does Monte Carlo testing. It has all the statistics, the monthly return, all of this gets tested and put like it blows my mind that this is even possible. Now it's also a little bit scary because yes, I've been working for on this for I think like a year now, and it gets better and better with the development of AI. But if I can do this and I spend $200 on Claude subscription a month, and I spend maybe 1 or 2 hours a week on this, if I can do this, what's BlackRock doing? What's JP Morgan doing with billions of dollars and a team of 20 PhD people? Like, it's a bit scary, Yes, SCP, I do use the Fable model mostly, but it's very heavy, obviously. So once I run out of Fable credits, I use the Opus one. But we have to also understand that I'm using Fable for everything. So we have to understand here that so far it's looking good, but like I'm not at the point where I haven't gotten a payout from this. I have not made real money from this, right? So we don't really need it. We don't really know if it's really working. But the thing is with prop firm trading is I'm using I'm using Fable on my Claude subscription, so I'm not using API. Everything is done via the Claude subscription, and I got $200 per month on the Claude Max 20 subscription, and it's not using any API tokens. Everything goes through the subscription. So when the usage is done, then I'll have to wait, right? Now, again, some people are not gonna like what I'm about to say, but to be able to get payouts from prop firms, you don't have to be long-term profitable. You don't have to be a long-term profitable trader. You just need to be profitable from buying the account, going through evaluation, getting funded, and then getting a payout. If that is your system being profitable for 4 months, you're going to make some good money. And then it might be unprofitable for 6 months, you lose money. gets back to profitability, you can get an account, you can make money. So what I'm building right now is I have one sleeve of this, if you will, that is going to be trading in real account, real money, my own money on the real markets. And then I'm actually building a prop firm version of this, where depending on the account I have, I can connect the software to MetaTrader, put in all the statistics of the account that I'm buying, and make sure that the system trades based on that statistics. I can also look at the backtesting history and say, okay, this system is on average mostly profitable during summer. Okay, so in summer, I'm going to buy an account, I'm going to trade that system in a prop firm, I'm going to get a nice payout, and then I'm not going to be trading that system anymore other than my real live account. So yeah, this is what you can do with Claude Code. It's absolutely insane. I would recommend you do this while you can, because in a couple of years, everyone is going to be doing it. And in 10 years, there's going to be so many people doing this that I don't even know what the markets are going to look like. I think it's going to be almost impossible to make money intraday when this hits, mainstream. It's going to be crazy. It's going to be crazy. All right, let me stop sharing this. So that's also why I haven't been trading for a long time, for different reasons. I'm busy working on different things, and this is the one of the things I'm working with. And I also see the potential, like why would I be trading all the time if I can make money doing this? Mm-hmm. But of course I haven't made any money in the last 12 months doing this, but still it's getting, I think we're getting close to something.
Oh, it's actually honestly insane when I see it. The fact that, and you mentioned that you only work on it 1-2 hours a week is just insane. It completely blows my mind, to be fairly honest. Like for me, it looks completely like rocket science.
Yeah, and I don't know how to code. Like I don't know anything of that. Like all I do is just I have ideas, I give it to Claude, and then we go back and forth on these ideas and we test things. But to be fair, there's a lot of bugs. There's still there's still going to be a lot of things I need to take care of for this to really be working. And honestly, right now most of my focus in trading is to manage the capital that I've managed to build up, because I'm now at the point where I'm now more interested in not losing money than making more money, if that makes sense. Like the capital that I have, I would be very happy to make like 10, 15, maybe 20% a year on that capital, because then if I can make 20% a year, pretty much at the point where I could just live on that. I could live on 20% a year, which is like that's the goal, right? Because on that system, I take maybe one trade every other month, and if you look at the account that I have, I'm trading that account through my company capital, and that account is just a flat tax. The tax is 1% of the whole account per year. That's all the tax I'm paying. I don't pay tax on profits. Like it's just 1%. And then of course I have to pay, company tax on that as well. But it's stupid when you understand, how to use all of these different instruments.
Yeah, it's crazy to her.
Yeah.
I'm still not at this level of using Claude, of AI in general.
I think you should try. I had a friend. He have a friend. He messaged me earlier today, and he told me that he finally, tried Claude, and he just wrote the document, gave it to Claude, and like, this is what I want to build, and this is what I want to do, and he's just blown away how well it's being built and how intuitive it was. So if you have ideas, just give those ideas to Claude, and it can build it for you.
Yeah, you need to give it a try, because it can, I feel like it can save you a lot of time on what you're manually doing otherwise, and some of the things are just impossible, But this paradox is that doing these things that save you time, like you need to make time to make those things that are gonna save you time.
Yeah, I mean, that's what it is, right? It's always time. You have to, if you're gonna spend time on something, you always, you have to sacrifice something else. And for me, everything I'm doing and everything I'm working on, I've seen that the one thing that I've had to sacrifice is my discretionary trading, because looking at the results through my prop firms and my trading, it hasn't been great for the last 6 to 12 months. It hasn't been great. So then I have to look at it and say, okay, am I going to spend more time on this, and really make sure that I create a new system or adjust the system because I was profitable and then I'm no longer profitable. So I'm like, okay, do I fix this, or do I spend my time on this instead, where I actually see some interesting results? Because trading is insanely difficult, It's so incredibly difficult. I remember I recently listened to a podcast from the CMT Association. They interviewed a trader with like 30 years of experience, and he was working at Credit Suisse, I believe, and they had a performance coach. And that performance coach came from the Red Bull F1 team.
Oh.
And that performance coach, he came to them and said, I don't know what trading has to do with F1. Like, I can't see the similarities, right? Like, and then he worked with these traders for like a year or so, and then he said, I can now very clearly see that there is a very clear correlation between what F1 drivers are doing and what traders are doing, and it's simply performing under pressure and making quick decisions under pressure. And then he went on to explain how trading, according to this performance coach, is mentally just insanely difficult for ordinary humans to do long term, right?
Yeah.
And I thought about that. I'm like, am I going to go down that route again to adjust my system and do all of that again? It's going to take me at least 6 months, and there is no guarantee at all of success. Or am I going to take that time and build a system using AI and Claude that might be able to take away the emotions and make it easier for me to make those decisions under pressure? And for me, it's a no-brainer. Build a system, see what it can do, because I think it has higher potential,
Yeah.
But that's, for some people, that's not the case. For me, that's the case because I'm actually quite bad at making decisions under pressure. So if I can remove that, then that would be good. Others are just very, very good at discretionary trading and short-term trading. So I believe that's what they should be doing. But I like it on the higher time frames. I thrive when when I trade the daily and the weekly, which unfortunately is not easy. Not easy in the CFD market because of the swaps.
Did you look at the futures after the last?
Yeah,
one?
I've looked at that, but I remember there was something about the margin requirements. I would have needed quite a big account, if I'm not mistaken.
Yeah.
Yeah. So I have to look into that and see. And then also the bigger issue is that I need to do it through a company capital, and trading futures in Sweden is very complicated. You need to have a proper platform, and to be able to have that, you might have to be setting up a company as a financial entity, which means paying like $150,000 a year or something like that.
Okay, that's a different conversation. Yeah, that's like that's pretty much if your paying swaps would come out cheaper probably. Well, depends of course, but at this point it's like what's cheaper, paying swaps or paying this?
Yeah, exactly. But it looks like we're running out of time. Okay. Good stuff, guys. Hopefully
the market is like
you
going
all
sideways. Trying to find a couple of entry points anyway.
Yeah.
On gold?
I'm
Yeah.
gonna wait a little bit after the CPI calms down.
Still in
Yeah,
the
I don't know.
range.
I think on gold, I'm kind of leaning towards a mean reversion move here, a break of this trend. I would love to get in around 4.2 though, like that. If we get a move down to 4.2, I'd love to see a bounce there, but I need to be patient. I think. Yes, Luna. Actually, I was walking yesterday. I was watching the stream. I was walking and I was reading the chat, and I walked straight into a pole, like with lightning. So embarrassing. It was people around me, and I was dropped the phone and everything. All right, guys, that's it for today. I will see you all
Tomorrow?
We'll see you all tomorrow.
Yeah. See you
All right.
tomorrow.
Thank
Second
you.
portion of inflation. Jonathan, thank you so much. It was awesome.
Yeah.
Gonna finally spend some
Thank
time
you.
looking into this. Thanks a lot.
Thank you,
No
Sean.
worries. All right. Take care, everyone.
Yep.
See you guys tomorrow.
Yep.